Hello and welcome to the latest edition of Market Sunrise. Coming up in the show today, as the trade deadline nears and letters to trading partners go out, we'll tell you what that means for the markets, which, as we all know, hit a record high last week. We'll update you on the newest threat by the president of an extra 10% tariff on the BRICS nations. That's Brazil, Russia, India, China and South Africa. We'll also have the latest on the Elon Musk Donald Trump saga and what that means for Tesla. And stick around too to hear from the president of Cisco, Jitu Patel. He gave me one answer to what's going to solve these global tensions. You won't want to miss that. So grab that coffee and let's own the morning. Well, we start with some tragic news out of Texas. The death toll from the catastrophic floods there has now reached at least 78, including 28 children. The search for girls missing from a summer camp is continuing. President Trump is due to visit the area later this week. Now, moving on to the markets, and these are the things you need to know before the opening bell rings on Wall Street. Over the weekend, the OPEC Plus group agreed to raise production by more than expected in August. The oil cartel raised output by 548,000 barrels per day, up from the 411,000 increase it announced 3 months earlier. Now, oil prices fell in early trade this Monday, but recovered somewhat as concerns about the impact of US tariffs on economic growth and oil demand rose. Well, speaking of tariffs, President Trump has warned that any country embracing, quote, anti-American policies of the BRICS bloc of nations will face an extra 10% tariff on exports. The BRICS groups, that's Brazil, Russia, India, China and South Africa, plus others, met at the weekend in Rio de Janeiro. They condemned military attacks on Iran and unilateral tariffs, but did not mention the US by name. Well, this latest threat comes as governments across the world prepare for a trade deadline on July 9th. That's the end of the 90-day pause on the steep levies announced on President Trump's Liberation Day back in April. So far, Washington has agreements with just Britain and Vietnam. We'll have more on this later in the show. And finally, according to reports, TikTok is developing a brand new version of its app for its 170 million US users. Well, the news comes as the Chinese-owned app faces being banned in the US in September if its parent company, ByteDance, does not sell it to an American owner. Now, on Sunday, the tech publication said that ByteDance had a sale agreement in place, and that the president said that he'll start talking to China about a deal either today or tomorrow. Well, on the earnings front, there are definitely some reports to look out for. In Asia, the big one will be TSMC on Thursday. But in the US, look out for Delta Airlines, Levi Strauss and Conagra Brands.
Time now for what to watch in earnings. We're keeping our eye on Delta, Conagra, and Levi's. Let's start with Delta, set to release its second quarter earnings on Thursday before markets open. The airline company beating earnings estimates in its previous two reports, establishing an expectations that Delta's earnings will surprise going forward. Analysts are becoming more bullish on Delta's prospects, even though the company's revenue growth is expected to stall. Conagra Brands releasing its fourth quarter earnings also on Thursday before markets open. Analysts forecast the packaged food company to report a decline in EPS year over year. Conagra has been underperforming amid weakness in sales, the company feeling the weight of supply constraints and supply chain challenges pressuring volume. And finally, Levi Strauss reporting second quarter earnings on Thursday after the markets close. The apparel manufacturer beating earnings per share for the last 4 quarters, but analysts do expect a decline to Levi Strauss's top and bottom lines. Revenue is expected to drop from the same quarter last year. Levi is experiencing challenges as well from supply chain disruptions, as well as inflation and economic uncertainty.
And today we'll have more trending tickers than usual. There's a lot of action after the long weekend, and we want to help you stay on top of it. Well, Tesla is the big ticker to watch today. In pre-market, it has fallen by close to 7% this morning. Year to date, it's down more than 20%. Why is this happening? Well, if you haven't been living under a rock, you must have heard about the beef between Elon Musk and Donald Trump, and that feud has only intensified over the long weekend. Shareholders had put pressure on Elon Musk to step away from politics, and he said he would do so. But that has been right until now. He announced a few days ago that he was launching a new political party. President Trump has threatened to cut government subsidies to Elon Musk companies, and this comes at a time when Musk faces challenges across the board and across the world. Very briefly, just to recap, in China, Musk faces increased competition from local makers of electric vehicles. Just in a few weeks, as many as 4 competitors to the Model Y are being announced. Meanwhile, in Europe, Tesla sales are falling. In some Scandinavian countries, they've been in free fall with minus 60% or more year on year. Now, robo-taxis are touted as Tesla's next big thing, but that's an industry that's full of regulatory hurdles and alienating the president, and its government isn't necessarily going to help Elon Musk. So investors are certainly holding their breath to see where Tesla heads next, and we'll keep covering that very closely on Yahoo Finance. Our next one is Shell. The oil major stock fell as much as 3.2% this morning after the company warned that it expected to report lower trading and production results for gas in the second quarter. For both LNG and ING, that's integrated natural gas and liquefied natural gas, Shell lowered the top end of its production guidance. The swift reaction from markets highlights that we live in a particularly volatile time for the energy sector, with big swings in the price of oil and other key commodities like LNG. For Shell, the pressure is even higher amid reports and speculation over a potential acquisition of its British rival BP. The Anglo-Dutch giant is likely to face more questions about its M&A plans when it releases results later this month. Even if Shell has denied its intention of merging with its struggling competitor, that story, well, it's just not going away. On to another global behemoth, this one in the mining world. Glencore is in the spotlight this morning. Shares were down more than 1.6%. The miner stock that's trading on the UK market, well, it's now down just over 1%. The miner stock trades on the UK market. It was one of the worst performers on the FTSE 100, actually. Now, Glencore has come under pressure as trade uncertainty weighs broadly on companies exposed to BRICS countries. And Glencore has major coal operations in South Africa, as well as copper and cobalt mines in the Democratic Republic of Congo. And that's not it. Glencore shares fell even as the miner announced the start of a big share buyback program worth up to $1 billion. The company said in a statement on Monday that it planned to complete the buybacks by February 2026. OK, let's move to India for our third trending ticker today, or rather to an Indian-American joint venture that seems to be catching the attention of some investors. Geo BlackRock Asset Management, a JV between Geo Financial and BlackRock, was reported to have raised more than $2.1 billion. So Geo Financial Services stock rose almost 1.3% on Monday. It's now up around 0.95%. It's originally a subsidiary of Mukesh Ambani's Reliance Industries. Now, Ambani is one of the world's richest men and a controversial figure in India. Well, this tie-up with BlackRock reportedly received investment from more than 90 institutional investors and 67,000 retail investors. And finally, another big stock to watch is Amazon. Prime Day starts tomorrow with heavy discounts across its platform, but it's now facing increased competition. Brian Sozzi breaks it down with help from his guests.
Have one important change this year, which I view as a solid third quarter earnings catalyst for Amazon. Prime Day will last 96 hours, twice as long as last year. The longer shopping period could ring the register for Amazon. Bank of America estimates in a new note Prime Day could haul in $21 billion in sales. Yes, that's correct, up 60% year over year. Despite this, I find one interesting thing when jumping onto the Yahoo Finance platform for some analysis. And analysts haven't hiked their EPS estimates on Amazon the last 90 days. In fact, they have fallen by 11 cents in the past 90 days. Still with me, my round table of pros, Brooke DePalma, Inez Ferre, and Jed Ellerbrook. Brooke, I'm going to go over to you because you cover consumer closely for us. A lot of other retailers, Walmart, Target, have tried to get some of Prime Day's turf in recent years, holding events of their own. But you heard the numbers there. This is going to be a big day for Amazon. Could it be a bad day for Walmart and Target?
Well, Walmart certainly looking to get in on the action. We now know that they're having a Walmart Deals event spanning the course of 6 days, starting at midnight on July 8th. And so Walmart's certainly thinking here, hey, this is not necessarily going to be a bad thing for us, but rather an opportunity here to really take market share as they continue to compete with Amazon, especially as Walmart looks to ramp up that key e-commerce business. Now, a far different story at Target. We know that Target has really struggled over the past year when it comes to that pullback in discretionary goods. Now, typically during this Prime Day event, let's be honest, sometimes we don't always buy those essentials. And so Target looking to get in on the action here. They're having a circle week from July 6th to July 12th. So not only are Walmart and Target looking to get in on the action, but they're saying, hey, we're having longer events for our most loyal customers here. And also something to note here is Amazon really using AI technology in this Prime Day event this year, and so it'll be interesting to see how Walmart and Target play into that too.
Brooke, right on. I don't need any more blenders. I got all the blenders I need. In fact, I just bought one for my desk here at Yahoo Finance HQ in New York City. I mean, I think it's great. It's a Shark Ninja blender. I can make smoothies in it. It's awesome. Jen, I want to get over to you. Yeah, it's really good. I'll show you. I mean, I sit right near you. Jen, I want to give her to you on Amazon stock. You know, we've been talking all morning long about stocks that have been doing well. Amazon stock, interestingly, down 8.5% from the January 27th highs. At the same time, other Mag 7 names like Meta, Nvidia hitting record highs. Is Amazon stock broken? And if so, why?
Yeah, no, it's not broken. Amazon stock has underperformed versus other Magnificent Seven names because Amazon is most exposed to the tariff uncertainty. And so I think the company guided conservatively for this upcoming second quarter earnings season. I think we'll see them beat that guidance here later this month. And as the tariff uncertainty fades, I think you'll see Amazon stock catch up. There's a lot of great stuff going on with their retail business, especially in their fulfillment network and the deployment of robots and just the additional retail sales and the leverage that provides them as they ship packages to people's homes. And then over on the cloud computing business, AWS, continued high, teens growth, which is outstanding. And I think there's room for that to improve further as they get more capacity online.
All right, let's get Jed, real quick. What people have forgotten that Prime Day sure rings up sales, but it's also an opportunity for them to get more Prime members. Is that the secret weapon of Amazon here on Prime Day?
Yeah, it is. It is. Once they get you in the network, in the system with Prime, it's really unusual for people to leave. The value of that Prime membership greatly exceeds its cost. And so Amazon continues to please customers and attract more and more every day.
Fantastic analysis there from our colleagues in the US. Well, it's time now for a short break, but stay tuned to Market Sunrise. Well, let's have a look at what's moving markets. Well, stocks edged downwards and the dollar drifted near multi-year lows this Monday. Why? Well, US officials flagged a delay on tariffs, but failed to provide specifics. Washington says it is close to finalising trade agreements in the coming days. Now, Scott Bessent, he's the Treasury Secretary, said that by noon today, letters will be sent out to countries where no deal is in the offing. Those trading partners by August the 1st will be put on the original levies announced back in April on President Trump's Liberation Day. Or as Bessent put it, they'll be hit by a boomerang. Well, with just 2 deals done, many analysts thought the deadline date would be pushed out. Dozens of countries, including top US allies such as the European Union, Japan and South Korea, have been left in limbo and face the renewed risk of high tariffs. And as I mentioned earlier, the extra 10% levy threat to those BRICS nations, well, China has come out and said once again that there are no winners in a trade war. Now, President Trump, though, insists that most countries will be done by July 9th, whether that's a letter or a deal. Now, since President Trump paused the higher levies, well, stock markets have rebounded strongly, while the bond markets have stabilised. Now, don't forget, the markets hit a record high last week, partly due to the strong jobs data released last Thursday, but also perhaps in response to getting the big, beautiful bill over the line before the president's self-imposed July 4th deadline. Well, this morning, it's fair to say that the market reaction, although negative generally globally, has been pretty muted. It could be argued that this latest tariff twist shows that investors are becoming more attuned to the cycle of dramatic lurches in US trade policy under the Trump administration. Gold prices did slip, but it's worth remembering that they did gain almost 2% last week. However, safe haven bonds were better bid. The yield on the 10-year Treasury note slipped by 2 basis points, for example. But the possibility of a rapid return to exceedingly high tariffs on many countries may reignite investor concerns, and the recent stock market rally and bond market stability could once again be under threat. Well, those global trade and geopolitical tensions were topics I addressed with the President and Chief Product Officer of Cisco, Jeetu Patel. He believes there is one answer to all our concerns. But obviously, we're in a bit of a strange world at the moment in terms of there's a lot of geopolitical tensions, there's a lot of trade tensions as well.
Yep.
How do you navigate all of that?
So in my mind, the one thing that is always a constant, and this is actually more true now than ever before, is whoever wins the AI race actually will win the economic race and will also win the national security race. And so regardless of who you are, you should be actually moving pretty fast with AI and innovating in AI because you don't want to be left behind in this race right now. And I feel like the US is very, very keen on making sure that our technologies are utilized by our allies as we build out this capacity. UK being one of our best. And we want to make sure that we actually continue to have that partnership get compounded over time.
Now, last up today, we have a call of the day. Catalyst Fund co-founder, Chief Investment Officer and Senior Portfolio Manager David Miller joins Market Domination to discuss a stock he thinks is worth buying, Robinhood, and a stock he recommends avoiding, Mara Holdings.
Welcome to Goodbye or Goodbye. Our goal is to help cut through the market noise to navigate the best moves for your portfolio. I'm here with Catalyst Fund's co-founder, Chief Investment Officer, and Senior Portfolio Manager, David Miller. So let's get right to what you like, David, and that is Robinhood. So this is one that's already done very well over the past year. I think it's up some 300%, and it's more than doubled this year alone. So let's talk about why you still like it, even with that. So one of the things that you watch in your portfolios is insider buying. And so we've seen some insider buying here for Robinhood, right?
Yeah, absolutely. Christopher Payne, a director at Robinhood, he fairly recently bought $1.9 million in stock in Robinhood. And when a director already has significant holdings in the company and they have some compensation tied to that company and they want to take more money out of their own pocket to buy more, that's always a good sign.
Yeah, let's talk about some of the other catalysts here. Robinhood, a number of products that this company's introduced over the past year has been pretty incredible. You're focusing in on tokenized stocks in particular. And this is basically I guess it's self-explanatory. It's a stock, but you can buy a token tied to that stock. Why is that an attractive thing for investors?
It really makes it so that Robinhood, rather than being a typical brokerage, is more the exchange themselves and fully dominating that market. Now, this isn't particular to the US yet, but this is a really interesting innovation that they have going on in Europe and where they recently launched in the UK and also in Spain. And then they're likely to be doing that in the near term in Germany. And Germany doesn't have free stock trading at the moment. So they're really coming in a position where they have some clear competitive advantages.
Why would you want to buy a token of a stock versus a stock?
Well, then you can trade in fractions, you can trade how you want. It's very open to the retail market. And frankly, it makes it more like a video game. They've really figured out how to
turn what we need,
stocks
David.
into entertainment. Whether or not people need it, they like it.
Yeah, they do like it. It's worked for Robinhood. And then there's the consistent growth. As it's come out with these new products, as it's gained new users, the company has grown.
Absolutely. I mean, they grew 60% on revenue last year. They did over $300 million in earnings on over $900 million in revenue last quarter. They're developing in a huge way because they've been able to offer 3% on credit cards that competitors can't because they don't get the brokerage business on the side through cross-selling. It's just been a tremendous growth story.
All right, let's talk about what could be an obstacle. And it's coming back to the beginning, it's the valuation after we have seen that stock just scream higher over the past year, but it hasn't really stopped it, right?
Yeah, frankly, likely the valuation is fair or might even be cheap at probably about 35, 40 times forward if they can keep growing in the way that they are. Now, consumers love Robinhood, and they'll probably continue to love Robinhood. The real question is what happens when we hit a bear market? And that's where the valuation may not be justified, because this isn't something like AI where it'll just keep growing through a bear market. People aren't going to be so thrilled when they're messing around with tokenized stock and it's going down.
And also just a quick follow question here. There has been some speculation that Robinhood might enter the S&P 500. The latest round of announcements for inclusion did not include Robinhood, and the stock is down a little bit on that. Is that something that you think is necessary for the stock to continue to go higher, to be included in the S&P?
Regardless, if the company keeps growing revenue, keeps growing earnings, they keep launching new products that consumers love, they will eventually be in the S&P 500. It's more just a question of when, not if.
Okay, let's get to the stock that you do not like as much, and also in the fintech realm. That's Mara Holdings. It's a Bitcoin miner, and that stock is down some 15-16% over the past year. So let's talk about why you don't like this one. It is not cheap to mine Bitcoin, but this company pays more than its peers or has higher costs. Well, what's going on there?
So the issue with Bitcoin mining is it's frankly a kind of crummy competitive business where no one has some specific competitive edge unless you get free power. If you have free power and you're tapping into a dam in China, or you're in Iceland and you have tremendous geothermal power, you can have a unique competitive advantage. The big problem with Bitcoin mining is the higher the price of Bitcoin goes, the more it costs to mine Bitcoin, the more compute that has to go in to each transaction. And that's actually a pretty big net negative. And frankly, if Mara's not doing better while Bitcoin's over 100,000, you can only imagine if Bitcoin fell in terms of prices, what could happen to their operating leverage.
And you know, it's trading at a premium to its Bitcoin holdings. Now, this is not necessarily unusual. If you look at Strategy, whose whole strategy is being a Bitcoin treasury company, it also trades at a premium. Why is that a problem for Mara?
They've really figured out a bit of a weird infinite money loop until it breaks over at Strategy, or MicroStrategy, largely because they have this ability to keep issuing more convertible notes without having interest payments tied to those directly. Mara doesn't have the ability to do that because they frankly lost a lot of money historically Bitcoin mining, so people prefer being in MicroStrategy from that perspective. It's not that I'm necessarily negative on Mara if Bitcoin prices go way higher. It's just you'd be much better off owning Bitcoin itself or owning Strategy. Gotcha.
And we kind of touched on this, but you say no unique competitive edge. It's not in Iceland, for example.
Sure. There really is none. You can think about it like any other mining business. There's never been this mining business that's been a tremendous business because anybody can do it. There's no ability to be better. It's a similar concept to if you own a bus company or an airline. You can't do anything that's unique or better that creates real customer loyalty and higher margins.
And then let's talk about what could go right for Mara in your view. They could get out of Bitcoin mining entirely and maybe just do Bitcoin treasury, or maybe lease some of their space to hyperscalers, for example?
Yeah, I mean, frankly, I think the thing that could go right in the biggest way is if they dump all the Bitcoin mining, take the money they're allocating that, buy more Bitcoin, tell the market they're doing the same type of thing that MicroStrategy is doing, and Bitcoin prices go up. That'd be the main scenario where it could do well.
Gotcha. Well, they're not doing it right now.
Not yet.
This is where we have. And you do not own Mara in any of your strategies. You do own Robinhood through some of your portfolios, correct?
That's right, yep.
All right, David, thank you so much. And thank you so much for watching Goodbye or Goodbye.
Well, thanks again for tuning in to Market Sunrise. We'll be back for the same unbeatable financial reporting. I'm Ramzan Karmali. Stay tuned for more on Yahoo Finance.